Stacking Cat.
Hello YouTube, and welcome to the Stacking Kat channel, where I talk all things silver with a little bit of gold. And thank you so much for watching, I greatly do appreciate it. And if you could please subscribe, smash the like button, and share this video, that would be awesome. Okay, so I wanted to do a video today and give you guys all a bit of an update about what's going on in the world of precious metals, specifically gold and silver. So as we've all known, we've seen a big rise in gold and silver price over the past few weeks. But today, Tuesday, August 11th of 2020, both metals closed a lot lower than what they did yesterday. As a matter of fact, gold dropped from $2,029.08 per ounce down to $1,907.30, and silver dropped from $29.23 an ounce down to $24.91. So gold's drop was about $122, a little bit less than that, and silver was $4.31. So those are pretty big pullbacks compared to what we've seen, kind of on par with the gains that we saw on both metals over the past few weeks. I believe it was that one day that kind of had this big rise. All right, so I just wanted to update everybody out there on that if you have not seen this yet. And, I will go into a little more specifics in future videos about stacking strategies. Right now, this was kind of a shock to the system, so to speak, when it comes to stacking precious metals as a savings or an investment. And, a few things have to do with it. In my opinion, the president's executive orders probably played a role, particularly the unemployment extension, as well as the payroll tax deferment, which I think will help the stock market and in turn cause a little hesitancy in the precious metals market. I think the stock market will kind of shore up a little bit there. However, that remains to be seen. This is such a volatile market during this time, and just the whole year has kind of been like that. So I am going to bring up an article, though, that I found on Kitco.com, kind of talking about the pullback and what an analyst's point of view was for that. And remember, I am not a financial analyst in any way, shape, or form. I just like to put out videos about silver and gold purely for entertainment purposes, but also to kind of offer a bit of my own playbook and how I go about stacking both of those metals. All right, so let's get to that article from Kitco.com. Okay, so I'm here on Kitco.com, and it says, here's how gold price lost over $100 in one day and why this is your second chance to get in before new highs. So this is written by Anna Golubova on Tuesday, August 11th of 2020 at 3:01 p.m., so a little bit after the markets closed. So Kitco News, gold and silver prices took a big step back on Tuesday as the highly anticipated price correction hit the precious metals market hard. Gold retreated more than $100 and silver shredded nearly $4 in just one trading day. Now, as we saw, it's actually a little over $4 right now, $4.13 as of this video. The sell-off, which was made up of profit-taking and new risk on sentiment, accelerated Tuesday afternoon. December COMEX gold is trading at $1,925.20, down 5.61% on the day, and September COMEX silver is at $25.45, down 14.39% on the day. The move down is not too surprising, as many analysts have been calling for a price correction after gold breached $1,920 an ounce, then $2,000 an ounce, and then continued to make new highs above that level. And all of this in just under 3 weeks. The precious metals complex, which posted a spectacular performance over the summer, was driven by a drop in rates, a steady increase in inflation expectations, and a falling U.S. dollar, TD Securities head of global strategy Bart Mellick said on Tuesday. The turnaround came when the U.S. dollar showed some strength and real rates reversed direction. The rally is now giving up some of these gains as these drivers lose momentum. Real rates are now rising along with nominal yields due to stimulus optimism and risk appetite, with the U.S. dollar also off its lows, Mellick pointed out. Most of the interest in gold this summer is coming from Western retail investors, which also means that profit-taking is very much on the table. Specs and CTAs are reducing their gold and silver exposure as volatility trends higher and as they take profits out of a crowded trade. The rapid rate of ETF gold and silver purchases, which have been a key driver for the summer rally, are also losing momentum, TD's Melich stated. Given that the U.S. economy will continue to positively rebound to an additional $1 trillion worth of fiscal stimulus and continued Fed measures, it is quite likely that rates and the dollar may see some better days into 2020. Gold could even drop as low as $1,890 an ounce before starting to climb back up, Melich pointed out. For silver, that low number could be around $22 an ounce. Given the technicals and the fundamentals, it would not be surprising to see spot gold trend down to around $1,890 an ounce and silver at around $22 an ounce before hitting new records, he said. The best news in all of this is that investors have a second chance to get into the precious metals market before prices start hitting new record highs again, which they are likely to do this year and next year. Correction represents a second chance to get on the gold and silver bandwagon, writes Melich. So good news there. TD Securities projects for gold to average $2,100 an ounce and for silver to average $30 an ounce during Q4 2021. So at this time next year, or September of 2021, is when the projections will hit. And so, however, before these levels can be reached, investors should pay close attention to the Federal Reserve and any possible yield control. Before the complex hits new highs, 2100 plus and 30 plus, there will need to be confirmation that the Fed will indeed suppress yields, consider average inflation targeting, and there are signs that inflation may move higher. At the same time, markets will want to see if monetization of the debt is in the cards before talk of these levels become sustained is credible. TD Securities projects an average gold price of $2,100 an ounce in Q4 2021 and $30 an ounce silver price during the same period, Melich said. Okay, so an interesting read from Kitco.com talking about what gold and silver may be doing and why this pullback may have happened. So it looks like, could it go down to under 1900 for gold? And if silver goes all the way down to 22, that's going to be a good buying period again. We will see how premiums react, though, on the online bullion sites. If you have a local coin shop in your area, this might be the time to go there. I just think you will get better, bargains is the best way to put it, just because you could negotiate and, they're a business, you're face to face, and it's just business being conducted. I think is a lot more advantageous when it comes to buying precious metals. Deals aren't always there, though, when you're live at a coin shop, so maybe online there will be better deals. We're just going to have to check that out. And if premiums do end up staying high, it'll just, once again, show that disconnect between the paper market and the physical market, the one that we're used to dealing with. So just something really to watch out for, everyone out there. Pay attention to those premiums, pay attention to price. I will try to come up with more updates as soon as they become available. I want to do this just to give everybody else out there, if you haven't had a chance to see any of this news, just so you know, just to be prepared. Looks like it's going to be a good time to buy silver again and probably gold. So let's see how that ends up going. Okay, so that will wrap things up for this video then. And if you'd like to see similar videos about silver with a little bit of gold, then please subscribe and push that notification bell, smash that like button, and leave a comment. And until next time, this is the Stacking Cat.